If you look at the blinking red and green tickers on financial news networks, it's easy to feel overwhelmed. The industry wants you to believe that building wealth requires complex mathematics, specialized Wall Street expertise, and constant stress. Building a rich, free life relies on a simple, time-tested approach that intentionally cuts out the middlemen and ignores the daily noise. Most people miss this opportunity because they fall into a common trap. They normalize borrowing, allowing their lifestyle to match or even exceed their income. Carrying debt is an unacceptable burden. When every dollar you make is committed to a certain image, even a high-earning professional becomes a gilded slave. Accepting debt as a fact of life is the single biggest roadblock to financial independence. It traps people in an endless cycle where they work simply to maintain an illusion of wealth. Breaking that cycle requires a new perspective on what money is for. It is the tool for navigating the world and buying your own autonomy. Stashing away FU money gives you the power to walk away from bad situations. Reaching that point starts with taking out a sharp knife and aggressively paying down every cent of existing debt. You also have to guard that freedom carefully. That means avoiding fiscally irresponsible people and never giving them access to your finances. Treating debt like a life-threatening emergency is the absolute prerequisite for reclaiming control of your own destiny. Once you are out of debt, you enter the wealth accumulation stage. The most powerful tool here is the Total Stock Market Index Fund, or VTSAX. This is a single container that holds tiny pieces of virtually every publicly traded company in the United States. Because you own actual businesses that hold real assets and create tangible products, your portfolio value rises alongside prices. This creates a highly effective historical hedge against the rising tide of inflation. History guarantees scary market crashes, what Collins calls big ugly events. But despite these terrifying drops, the market has relentlessly gone up over time. Financial media pundits will claim they know exactly when the next drop is coming. Trying to predict these cycles based on their warnings will invariably cause you to lose money. Traditional investment advisors are often just another cost. Their management fees quietly consume your wealth year after year. Yet sitting quietly in a simple index fund outperforms 82% of those active professionals. Successful wealth accumulation relies entirely on consistently adding your savings to one massive, diverse basket and having the discipline to ignore both market panic and industry middlemen. As you approach retirement, the goal shifts from building wealth to keeping it. This is the wealth preservation stage, designed for investors requiring a smoother ride in the markets. This graph shows how we smooth out that ride. While stocks are volatile, introducing the Total Bond Market Index Fund, or VBTLX, provides a shock absorber. By shifting a percentage of your portfolio into this bond fund, you lock in your wealth and mathematically mitigate your risk. There is also a secondary strategy for preserving your wealth. If you have a high-deductible health insurance plan, you can use a health savings account as an exceptionally powerful investment tool. Most people use these accounts just to pay short-term medical bills, but by fully funding an HSA and paying your medical expenses out of pocket, the money inside grows tax-free, creating a highly effective retirement vehicle. True wealth preservation comes down to mathematically balancing your risk with bonds and exploiting unique tax advantages to protect your freedom. This diagram illustrates the mathematical finish line of financial independence. You reach the finish line the moment you can safely live on a 4% withdrawal rate of your total investments per year, allowing the main body of your wealth to regenerate. High-income earners frequently go completely broke, while low-income earners regularly achieve this freedom. Reaching the 4% threshold is dictated almost entirely by how effectively you control your lifestyle needs, rather than how much you earn. It all comes back to 3 relentless rules: spend less than you earn, invest the surplus, and avoid debt. Complex, expensive investments do not exist to help you reach that finish line faster. They move your money into the financial industry's pockets. By keeping your financial strategy painfully simple, you eliminate the stress of the market, you beat the so-called experts, and most importantly, you buy back your life.